One of the big issues, Aashish, that people have realized during this lockdown and during these difficult times is the importance of liquidity. So on the one hand, you have people, who've taken pay cuts, who have lost jobs and need the money to be able to survive. On the other hand, these unfortunate incidents that happened on the debt side, where more than 25,000 crore of money is now no longer available to the investor as a liquidity measure in these difficult times. So my question to you is, how important is liquidity when you pick an asset class? And given your experience, have you seen that by and large, the kind of stocks that mutual funds invest in, when it comes to equity at least, liquidity has not been an issue?
Yeah, I think that, within equity also, if your portfolio has a lot of, say, let's say, you are a high net worth investor, or, somebody who has very concentrated portfolios, and your concentration seems to be a lot more in, say, small caps. I think then, even you would face liquidity challenges. But I think this logic doesn't apply by and large to our audience, which is of mutual fund investors. I think for their perspective, the beauty about investing in equity is that even with a 10 to 15% cut, or even with a 20% cut, the point is that there is no way that the liquidity there's no way you will be deprived of the liquidity. So I think open-ended equity mutual funds, that definitely stands to be an advantage. But on the other hand, I feel that if there are any goals, or if there is any emergency fund which was to be created, then that is something which is an ongoing process, and that should have been taken care of in the normal course. I don't think that we should think about liquidity exactly when this kind of crisis comes up. I think we should maintain some liquidity or an emergency fund at all points in time. I think that goes without saying.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.